Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA. This is Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. So a very good morning and a brand new week ahead. So today is Monday, 27th of November. So before we kickstart our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, no financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so basically this is the key takeaway for our daily dose of market insights. So let me start off with what happened last Friday. So last Friday is a rather quiet US session and European session. Why? Because of the post-Thanksgiving holiday, which is i.e. the US stock market is closed for half a day. But overall, the performance of the US stock market has been rather positive as per se, given the shortened trading week last week. So the SPX 500 ended last Friday almost unchanged. The underperformer is the Nasdaq 100, down by a fair bit of negative 0.12%. The Dow Jones Industrial Average and the Russell 2000 both added 0.3% and 0.67% consecutively, respectively, pardon me. And all in all, they actually kept a 4 consecutive week of rally since the end of October this year. So pretty much of a rosy, still optimistic, we call it sentiment being inherent in the benchmark US stock market. So two key, we call it economic highlights, for you all is number one, as you all know that at the start of last Friday all the way until the weekend is considered as Black Friday sales, and Black Friday sales is pretty much pivotal. Why? Because it actually allow us to gauge the strength of the US consumer, especially given the fact that the higher interest rates environment in US has been ongoing for the last 1.5 years, and we got to see how does it impact on consumer spending in US given the Black Friday we call it behavior of US consumer spending as a benchmark of the health of the US consumer. So quite surprisingly, if you look at the latest data being set up by Adobe, over here you could look at my screen. Give me a minute, I think my screen is not showing yet. I think it's hang at the moment in time. Okay, let me do some adjustment so that you all could share. Yeah, so you guys can see the screen again. So let me expand it. So what you could see over here, right, the so far Black Friday shopping online spending record based on Adobe is actually went all the way up to 7.5% from last year. It means a year-on-year increase of 7.5%, and it set a spending record of 9.8 billion. So that's pretty much rosy. Why? Because if you look at the report over here, what Adobe actually forecast was actually to grow for 4.8% initially. So far it already kind of surpassed the initial forecast of 4.8%, coming in at 7.5% so far based on the current data. Okay, do not forget over here is that today also is another sale, we call it Cyber Monday sale as well, where pretty much merchandise is being slashed on a hefty discount. So given the fact that it seems to us that the US consumer is still pretty much resilient despite the fact that higher interest rate environment in the last 1.5 years. So that's really positive as per se. Then on the other hand, we want to see over here is the release of the global flash US composite PMI data on last Friday. That means the manufacturing and the services. So yes, even though manufacturing PMI inched down lower, still in contractionary mode at 49.4%. So that's actually a 3-month low. But the services business activity index actually rose to 50.8, above October of 50.6 to a 4-month high. So as this is pretty much in line with the Black Friday what you call sales online sales record as compiled by Adobe earlier, which I flashed you all, that the services activity in US is still robust, okay, despite the fact of a higher interest rate environment. So that's actually a positive sign as well. But one thing negative over here is overall, they actually surveyed the US company. So these are all surveyed data. It's not the real hard data yet, because it's soft data. So they actually lowered their workforce number for November based on the survey, this PMI survey, for the first time in 3.5 years. All right, so that could actually start to show signs that US corporations are now much more conservative in terms of their hiring behavior. So that could actually translate to a hard data in lackluster non-farm payroll NFP data down the road in the next 1 to 2 months. All right, so that actually that's a negative news flow based on this surveyed PMI data, given the fact that in the first 3.5 years, US companies based on this survey data actually reduce their workforce or lower their workforce numbers. So all in all, right, that could actually give the Fed potentially more reasons to be tilting towards more of a dovish side of the story in 2024, rather than maintaining their initial higher for longer interest rate for a longer period of time. So that could be also be a positive catalyst for the benchmark US stock indices. Why? Because we potentially could see a looser liquidity environment in 2024 that could actually be beneficial to the positive animal spirits towards risk assets like equities. Okay, so these are the key highlights that I want to highlight for you last Friday, that took place on last Friday. So now let us take a look at the short-term technical outlook on the various asset classes. So let's start with the US benchmark stock indices first. All right, okay, so let us start with the Nasdaq 100. Okay, so now let me expand my screen so that you guys could see much clearer. Okay, Nasdaq 100. So during the Asia session today, okay, let me expand my screen. Okay, the US now inched down much lower, hitting the intermediates, the near-term support at 15,900, but still holding above the 15,765, 15,690 key short-term pivotal support that we highlighted last week. Okay, so this support level, we actually use it as a make or break level to actually maintain this short-term bullish outlook on the US Nasdaq 100. So no change, given the fact that the RSI is now back towards the oversold region. So initially the overbought condition since mid of last week has been more or less been worked out. So still using 15,765, 15,690 as my key short-term pivotal support level to maintain that short-term bullish outlook. Potentially retesting 16,160. Above it sees the next resistance coming in at 16,310. But however, if we start to see the hourly close below 15,690, which correspond to the lower boundary of this minor ascending channel in place since the end of October, or 27th of October to be precise, will kickstart a potential minor corrective pullback to retest the 20-day moving average, also confluencing with the former minor swing out of 10th of November that is acting as a next intermediate support at 15,380. Okay, now moving on to the Dow Jones Industrial Average, which is the US Wall Street 30. So US Wall Street 30 managed to surpass last Friday the first intermediate resistance that we highlighted, 35,295. So still no change, still using 35,000 figure level as the key short-term pivotal support level, also corresponding to this minor ascending trend line support in place since 10th of November, and this minor congestion area of 16th of November to 22nd of November. All right, so as long as 35,000 key short-term pivotal support holds, potentially we would still maintain that short-term bullish outlook on the US Wall Street 30, with the next resistance expecting to come in at 35,300, a confluence of Fibo extension cluster level, and as well as the upper limit of this minor ascending channel that is in place since 10th of November, and as well as this this Fibo extension cluster level confluencing at 35,830 as well. Okay, so now German 30. So the German 30 last Friday also hit the first intermediate resistance at 16,050 before trying to pull back during the US session. RSI still holding above this parallel ascending support level, now at 40 40 level on the RSI. So with that, we're still maintaining that short-term bullish outlook using a tightened key short-term pivotal support at 15,930, which actually confluence with the congestion zone, minor congestion zone of 21st of November to 22nd of November. As long as this level holds, potentially the next resistance may come in at 16,200 level. All right, but however, if we start to see a breakdown below 15,930, then potentially we may kickstart a minor corrective pullback to retest the 200-day moving average, acting as a support level at 15,660 slash 15,560, which is the 20-day moving average just below it as well. And graphically is this former minor congestion area over here. Okay, that's confluence with this 15,660 and 15,560 level. Okay, so that's for the German 30 index. So now going on to be the Nikkei 225 or the Japan 225. So the Japan 225, similarly, it tested one time, two times, three times this minor ascending channel, minor ascending, minor range range resistance, okay, medium term range resistance level that is in place since 14th of June this year at 3,825 level. Okay, we go back over here. Okay, at this point in time, so this is a pretty much key level that the bulls need to surpass to actually see further potential upside. So right now it's actually a pullback during the Asia session, and it's resting right at the minor ascending channel support that is in place since 8th of November swing low, and also now I think as a support at 33,420 level, and also with the RSI now back towards the oversold region after working off its initial overbought region. Yes, on last Friday. Okay, on last Friday. So with that, no change. I'll be still using the former we call it a bullish breakout medium term trend line. Previously it was a resistance, that is this dotted green line over here, now turns into a pullback support at 33,100 level. Okay, so if you look at what's this level, we go to the daily chart. Okay, for sure this is a very clear descending, former descending trend line resistance, now turns into a pullback support at 33,100 level. So with that, this level will still be the same pivotal support level that I have for late last week to maintain that short-term bullish outlook. A break above 33,825 exposes the next intermediate resistance at 33,410, which confluence with the upper limit of this minor ascending channel. But however, if we start to see hourly close below 33,100, then we will start to see a minor corrective pullback towards 32,800 level, which is the 20-day moving average, I think as a support level. A break below it sees this minor corrective pullback extended towards the 50-day moving average, I think as a support at 50-day moving average, pardon me, I think as a support at 32,200, and also this minor swing low area of 8th of October to 10th of November as well, that is confluencing closely at 32,200. Okay, so what's next for the Hang Seng Index or the Hong Kong 33 Index? So Hong Kong 33 Index is going to be very weak since late last week. Why? Because of this ongoing, we call it a flu outbreak among the small children in China, rising the fears of another round of potential rumored, we call it so-called COVID-19 infection outbreak potentially. I mean, that is still is a rumor, okay, but because due to the rumor, it created a bit of fear into the China stock market and its related proxy market, especially on the Hang Seng Index and the Hang Seng HSCI and the Hang Seng Tech Index. So on the Hong Kong 33 index, as reflected in our OANDA trading platform, right now the price action broke below the 50 and the 20-day moving average again on the hourly time frame, and now looking to actually retest this is the hourly chart. So basically you could actually on TradingView you could actually overlay a higher time frame element to do multi time frame analysis on a single time frame chart, like what I did over here. Price action broke below the 20 and the 50-day moving average, and right now is retesting the 17,300 support level, which is actually the minor ascending trend line support from 24th October low that managed to help previous decline on 1st of November and 13th of November. So right now, given this ongoing rumor that is still swirling in the China financial market of this ongoing flu outbreak among small kids, I would rather stay neutral right now, between sideways between 17,680 last Friday's swing high and this 17,300 support level. It means flipping to a neutrality stance for today for the Hong Kong 33. Unless we start to see a clear breakout hourly close above 17,680, then potentially we could start to see a revival of a short-term bullish momentum to in first step to retest this 21st of November swing high area at 18,040 level. Okay, so that's for the outlook on the major benchmark stock indices. Okay, now flipping to the FX market. So over the FX market, if you look at the dollar index, continue to remains rather weak, lackluster. So based on last Friday performance, it continued to hover right below the 200-day moving average in last Friday, right? Rather weak. And today's Asia session continue to see a follow negative downside follow through. So given the fact that it has been pretty much lackluster in the dollar index, indicating to us that potentially we could start to see further dollar weakness, at least in the short term. So with that, I'll be still maintaining that short-term bullish outlook on the euro dollar. So for the euro dollar, last Thursday or last Friday, it managed to break above the intermediate resistance level at 1090. So this turns into a minor pullback level, pullback support level. RSI hasn't hit the overbought level yet. Okay, there's no clear signs of a bullish, bearish divergence. As well as you can see, the RSI going to shape higher high in line with price action. So I don't want to tie it so tight to 1.09 as my key short-term pivotal support. Make it at slightly higher at 1.085, which is that former swing low, the swing low of the 22nd of November, and also correspond to this minor ascending channel support that is in place since the low of 2nd of November. So as long as 1.085 level short-term pivotal support holds, we will still maintain that short-term bullish outlook on the euro dollar. Next resistance coming in at 1.099, followed by 11040. However, if we start to see a breakdown below 1.085, then potentially we may kickstart a minor corrective decline to retest the next intermediate support zone at 1.075/1.072, which is also confluence with the upward sloping 20-day moving average. Okay, so now what's next for the sterling dollar? It means the sterling pound against the US dollar. It's going to inch much higher, shaping higher high. Okay, price action on the RSI has really hit the overbought level, but no signs of a bullish exhaustion yet. That means signs of the kickstart of a minor corrective pullback. Why? Because of the similar price action on the RSI compared to the similar price action on the sterling dollar. Okay, so RSI is showing higher high, sterling dollar showing higher high. No signs, no clear signs of a bearish or bullish exhaustion. Okay, given this strong push up since 23rd of November. So yes, the RSI now has been working down, working off from its overbought level, as it have retraced from overbought level. So potentially there could be a minor slide heading back towards the 50 level mark here, which is corresponding to the 1.2560 level. So I'll be using a slightly tightened key short-term pivotal support for today. Will be the former swing high area of 15th of November and 20th of November, now acting as a pullback support at 125 figure level. So as long as 125 figure level holds, potentially the next intermediate resistance to watch out for will be at 126.80, followed by 127.20 level on the sterling dollar, which actually correspond to the 61.8 Fibo retracement of the previous down move from 14th of July high to 4th of October low, and as well as this minor congestion area over here of 30th of October and 1st of September. All right, so but however, if we start to see an hourly close below 1.25 figure level, potentially we could see a further extension of a slide to retest the 200-day moving average slash 20-day moving average, both of them acting as a confluencing as a graphical support at 124.40 for 123.75. Okay, now moving on, next will be the other currency will be the, let me share what is the other currency, will be the Aussie dollar. So on the Aussie dollar over here, what we could see on the Aussie dollar on the daily chart is now attempting to actually retest the 200-day moving average again, tested the third time for so far at 65.95. RSI continue to shape higher high. You could see over here, higher high, hasn't hit the overbought level yet. And if we could look at the hourly RSI is going to hold above the 50 level mark. So with that, right, I'll be looking to flip to a much more of a bullish bias for today, given the positive element that is being seen on the hourly RSI and the daily RSI, which I highlighted. So 65.20, 65 figure will be the key short-term pivotal support level. We need to have a breakout above 65.95. Potentially could seize the next intermediate resistance coming in at 66 figures slash 66.50 slash 66.75 in the first step, which also correspond to the 1.236 Fibo extension, as well as the former. Okay, if you go to the daily chart, you could see pretty clearly this is the former range support level, ascending range support level, broken down turns into a pullback resistance at 66.75 level. Okay, so that's for the Aussie dollar. But however, if we start to see an hourly close below 65 figure level, then potentially we could see an extension of a minor corrective pullback towards 64.40, which correspond to the lower boundary of this minor ascending channel that is in place since 26th of October, and very closely also the 50-day moving average. Okay, so that's for the Aussie dollar. So what's next for the dollar yen? So dollar yen last week we going to have a bearish bias, indicating that the rebound off from 21st of November swing low area at 147.30 is more likely a corrective rebound in nature, or potentially we call it a dead cat bounce. And right now is potentially the start of a new short-term downtrend leg on the dollar yen. So no change. I don't want to tie it so tight at the 50-day moving average that the bulls has faced a challenge since late last week, which now acting as a resistance at around 149.70. So I'm still using that 150.20, which is the 20-day moving average as well. Short-term pivotal resistance. Looking for a further potential push down towards 148.40. A breakdown below it potentially could add more prudence towards the start of this another potential short-term down leg to retest the 21st of November swing low area at 147.30 in the first step. However, if we start to see an hourly close above 150.20, then this short-term bearish outlook will be invalidated on the dollar yen, where we start to see a squeeze up towards the next intermediate resistance level at 151.40, which is slightly below the major resistance of 151.95 level. All right, so that's for the dollar yen outlook, still maintaining that short-term bearish outlook below 150.20. So now what's cooking for gold? So gold for today, given the fact that the dollar continues to face, we call it a weakness, as we could see across the pair that I share with you all, the gold actually benefited from this ongoing dollar weakness. And in today's Asia session, it actually surpassed the 2006 level. This is the former intermediate resistance that is in place since 27th of October. I think as a tested one time, two time, three time, fourth time, and today it managed to stage that breakout. Okay, so with that, right, I don't want to tie it so tightly at 2006 as my short-term pivotal support level for today. I will use last week's swing low area, which is also corresponding slightly below the 20-day moving average at 1985. So using a tighter 1985 as my key short-term pivotal support level, and also this pivotal support level also confluence with the medium-term ascending trend line support that is in place in our 6th of October low level. Okay, so looking for the next resistance potentially to come in at the zone of 2028/2037 in short term. Okay, so that is still the level to look out for in short term. A break above 2036 potentially could take us up to 2067 level /2075. So 2075 is the all-time high level for gold. All right, so however, if we start to see a breakdown and hourly close below 1985, then potentially this minor pullback could translate into a much more extension of a corrective decline to retest the next support level at 1967/1957, 1957, slightly above the 200-day moving average, which is in fact the swing low of 15th of November to 16th of November. Yeah, so given the fact that the RSI also hit the overbought region as well, but no bearish divergence, so indicating to us that whatever pullback over here should not lead to we call it extension of a minor corrective decline scenario. okay, as long as 1985 key short-term pivotal support holds. So still maintaining that bullish outlook on gold. So what's WTI crude? So as you know that last week itself, the OPEC Plus member actually delayed last Sunday meeting due to minor squabbles among themselves to actually do not have a kind of a clear-cut agreement on how they're going to actually extend their supply cut into 2024. So there was actually due to media report, there was a rumor that OPEC leading member, which is Saudi Arabia, is actually in favor of extending this year supply cut into the first half of 2024, but that doesn't actually gel well with other members, especially the African nation. So that actually explained why the OPEC Plus meeting was delayed from initially was scheduled yesterday to this coming Thursday, which is 30th of November. So that create a bit of volatility in oil prices. So if you look at the oil price going to actually swing between 78.10 and 72.70/72.40. So 78.10 is pretty much crucial. Why? Because now it actually is the swing high of 21st of November and 22nd of November, as well as the 200-day and the 20-day moving average conferencing as a resistance as well. So given the uncertainty surrounding the events right now leading into the event of the OPEC Plus meeting this Thursday, so I will still stay neutral between 78.10 and 72.70/72.40 at this point in time. Unless we have an hourly close above 78.10, then potentially we could see a bit of a short-term bullish momentum scenario coming back into WTI oil, which is West Texas oil, to test the first intermediate resistance at 81.05 level. All right, so still maintaining that neutrality stance on West Texas oil. So before we end, what's next in terms of the economic calendar for today to look out for? So today seems to be a very quiet day as well. Expect the fact at 10 p.m. Singapore time, there'll be a ECB President Lagarde speech, something to take note of. Market participants was to be interested to hear her view on the potential stagflation scenario in Eurozone and how does it translate to ECB monetary policy. And going forward, in the later part of the US session at 11 p.m., we'll have new home sales figure out. Okay, so that's pretty much sum up for today's session on my daily dose of market insight. So with that, have a great day ahead, and we shall speak tomorrow. Thank you.